So you found a cute cabin in the mountains or a sleek condo downtown and you're wondering, would this make a good short-term rental? Well, before you put an offer or start furnishing that guest suite, you need to analyze the market, and not just with a quick Zillow search. In this video, I'll walk you through the fundamentals of short-term rental market analysis. We'll explain what to look for, what metrics matter, and how to avoid the four most common pitfalls investors make when choosing a market. Let's get into it. A strong short-term rental investment starts with one thing: knowing your market. Too many hosts rush in without doing their homework, and it shows. High vacancy rates, mispriced listings, and properties that never break even. But it doesn't have to be that way. When you base your decision on real data, not assumptions, you dramatically improve your chances of earning consistent revenue and scaling your portfolio. Market analysis is the foundation of any profitable Airbnb business. Whether you're brand new to short-term rentals or expanding into a new location, your first move should be analyzing the area, not the property. This step lets you answer the big question: is there actually demand for a rental like this? It's easy to fall in love with a property's charm or a market's popularity, but without real data, occupancy rates, ADRs, seasonality, you're just guessing. The right analysis can show you what size units are most in demand, which neighborhoods outperform others, how competitive the market is, and what income you could realistically expect. In other words, it tells you whether the juice is worth the squeeze. Let's say you're looking at properties in two markets, Palm Springs and Asheville. One has higher average nightly rates. The other has better occupancy. Which one's the better bet? That's where understanding key STR metrics comes in. According to AirDNA, here are the 5 most critical data points you need to evaluate. Average daily rate, or ADR, which is how much properties like yours typically earn per night. Occupancy rate, how often those properties are booked. Revenue per available rental, or RevPAR, a blend of ADR and occupancy, giving you your expected monthly income. Seasonality, how income fluctuates month to month, which impacts your cash flow. Market supply growth, how many new rentals are entering the market, which affects competition. If you're seeing rising revenue and relatively stable supply, that's a sign of a strong market. But if revenue is flat and supply is spiking, it may signal saturation. Broad averages only tell part of the story. To get a more accurate picture, you need to compare your property to listings that are truly similar. Same number of bedrooms, similar amenities, in the same part of town. That's your comp set. AirDNA lets you filter down to custom comp sets so you're not making assumptions based on mismatched data. For example, if you're buying a 2-bedroom lakefront cottage, it's not helpful to look at ADRs for all properties in the county, including studios and inland condos. Dig deeper. Look at comparable listings performance, read their reviews, and see how pricing changes by season or day of the week. This isn't just research, it's your business strategy. One of the biggest mistakes new investors make is chasing hype instead of data. Just because a city is trending on TikTok or ranked in a travel magazine doesn't mean it's profitable for short-term rentals. In fact, some of the most popular destinations are already oversaturated, have heavy regulations, or suffer from volatile demand. Don't assume a vacation spot equals a smart investment. Let the numbers guide you. Look for strong RevPAR, reasonable entry prices, and demand that's consistent, not just tied to one big festival or season. Another major oversight: ignoring local short-term rental laws. Even if a market looks great on paper, short-term rental regulations can make or break your investment. Some cities require specific licenses, restrict the number of days you can rent, or ban non-owner occupied listings altogether. We recommend researching local ordinances before you buy. Check city websites, short-term rental advocacy groups, and even Facebook host communities to get a sense of the current rules and how strictly they're enforced. Regulation can change quickly, so make sure you have a clear picture of what's allowed and what's not, or you could end up with a property you can't legally operate. When you look at a city's average revenue, or ADR, it's tempting to assume your listing will perform the same or better. but many of those high numbers come from the best performing 5 to 10% of properties. They often have features like incredible locations or years of stellar reviews. If you assume you'll be at the top from day one, you're setting yourself up for disappointment. Instead, we recommend building your projections based on the 50th to 75th percentile. That gives you a more conservative and realistic starting point. If you do outperform later, great, but at least you won't be underwater if things take longer to ramp up. Even in top performing markets, income isn't always steady. Seasonality plays a massive role in your cash flow, and many hosts overlook it. For example, if 60% of your income comes from summer bookings, will you have enough reserves to cover winter expenses? Knowing your high and low seasons help you price appropriately, plan maintenance, and manage your expectations. And don't forget to factor in operating costs, cleaning, utilities, supplies, management fees, repairs. Just because a listing earns $5,000 per month doesn't mean that's what you'll pocket. Short-term rental success isn't just about how much you make, it's about what you keep. Analyzing your Airbnb market is the single most important step before buying a short-term rental. It's not glamorous, but it's what separates hobbyists from successful investors. Understanding the key metrics, avoid the common traps, and make sure to use tools like AirDNA to base your decisions on real performance, not just gut feelings or online buzz. You can check out AirDNA at the link in the description below. Have you ever made an error analyzing a market? What tips do you have for those new to short-term rentals? And let us know your answers to those questions in the comments below. If this video helped you, make sure to subscribe and give this video a thumbs up.